Okay, good afternoon. Good afternoon. Let's get through this class quickly. Let's get through this class quickly, and then maybe I give you time off to prepare for the test. You need to rest. You need to focus on the basics. Even if it means going to the third year module exercises on VAT, donations tax, I'm sure that will be enough. I haven't really answered this, but I'm happy. I'm hearing that Ayanda has answered some. She would be guiding us here and there. Ayanda, you will be doing more talking on each question is right, and then we can debate. We can ask each other questions. But take the lead in this class because you have been there. And ask those areas where you don't understand, where you didn't understand fully. So here is the question. What we are required to do this part A, discuss the value-added tax implications for constructs for the purchase of and subsequent use of the single back by the operation manager. No calculations are required here, and it's 9 marks. Okay, let's read about the motor car, the single back. I think the notice here. A construct is a construction company that currently owns only one building that is called the plaza. The plaza is an urban establishment that constitutes of upmarket luxury, one-bedroom lofts on the first level and retail outlets on the ground level. The lofts takes up to 60% of the total square meters of plaza, whilst retail outlets take up the remainder. SARS has approved the floor space method as the apportionment method to be applied by the company. The company has an August financial year end and is registered for VAT purposes with the tax periods of 2 months ending on the last day of October, December, February, April, June, and August. So 10 marks, don't calculate. I'm sure that's what confused you.
No, sir, I'm not confused.
Okay, you are fine with this one, eh?
Yes.
Okay. So if they say right,
Yeah,
what
but I did.
what
But I did the calculations.
you did but you did some explanation as well.
Yes.
Okay. Okay, that implication of the purchase. So first of all, we can say the purchase of the motor car of the single back will result into construct claiming input tax, isn't it?
Yes.
Input tax. That's the first thing. Number two, so there are some input tax implications. Number two, what are you seeing, which we must take? Time of supply. That's what they want if they say VAT implications. What is time of supply here? If you can look at it.
The company has an August financial year end.
And when did it happen? When was the purchase?
On the last day of October and December. Oh, okay.
When was it purchased? Okay. The single cab baki.
Oh, okay. So, on the 31st of April,
Yes, the single cab baki
2022,
was purchased
on the 31st of August, April 2022.
on 31 April. Does April end on 31?
No, but it's written 31 here.
2022. Which is the time of supply. The date of supply. So which period? So input tax will be claimed during
May.
the what? The third. Remember, it ends on which they gave us the months: April, June, August. During the April third period. Are you seeing where we are going?
Okay. Yes, I see, but I didn't know that we're supposed to explain those.
Remember, they said no calculations. If they say no calculations, for you to be able to get marks, these are the these are the areas you must touch. What else are you seeing?
Value of supply.
Yes. What's the value of supply? Is the purchase price, isn't it?
The 500,000.
Which is 400,000. It's very important. For what else are we looking at?
The adjustments, so the
Where is that?
apportionment. The
Very good.
apportionment.
Very
Because
good. You can say, so which portion are we going to take? What are the lofts?
the taxable supplies, the loaves are the residential,
The
which is they
residential.
are exempted.
Yes.
So I
So,
said 100 less 60. It's 40. So we'll take the 40% as if it is taxable supplies.
yeah, input tax will be claimed to the extent the supply is used for making taxable supply. So we have got the lofts, which is residential accommodation. Makes up 60%. 60%. And the stores are the retail outlet, the retail
Outlets.
outlets Makes up
40%.
40%. Input tax will therefore be claimed on the 40%, which is the taxable portion of the business. Which section deals with apportionment?
Let me see. Apportionment. Wait.
But if you push comes to shove, don't stretch yourself about sections. Yeah, but
Okay.
even I'm sure even on section 17 it's there, where they say
Yes.
on section 17 it touches on apportionment. Just verify which section.
Isn't it section 18? The change in adjustment, in use of adjustment.
Okay, yeah, I will verify there. But yeah, no, that is, but what we must discuss is this. So they said no calculations.
Yeah.
Yeah, but however, we can simply calculate.
And also, so the single bike is not a motor car.
Yes. Yeah. So you can put the single kabibaki, but we should have put it here like a single kabibaki. We've already touched it
Oh, okay.
because we are going to claim input tax.
Yes.
Okay. Input tax claimable, it's going to be 400,000 multiplied by 15 over 115. How much is the amount?
And sir, also, I wanted to ask you.
Mhm.
Okay, let's complete the calculation, then I'll ask you. You forgot to multiply by 40.
Okay, yes. Multiply by 40%. How much are we getting?
Mm, I didn't calculate the total, but I did the calculations. Okay, let me calculate.
I'm getting 20,870 rand.
Yes, I also got that.
So
Yes,
I'm sure you saw when you only calculated, you won't be able to get all of these marks.
Mm.
You won't be able. You did not
And
touch.
they didn't tell us that the
What
I
about?
wanted to, oh wow, the amount includes VAT, but
Yes,
since they told us that the vendor is the company is VAT registered, then you assume that the 400,000 includes VAT.
yes,
On
and
some
as
question
well.
papers, they would tell us that
Mm.
all the amounts include VAT.
And also be careful. Sometimes on the instructions they give you, right on the
Oh,
instructions.
they did tell us that 400,000 inclusive of VAT. But there was this, okay,
Yeah, I know, but sometimes they write on the instructions.
mm.
So look everywhere. They will always tell you that the amount.
Oh, okay. I think it's the following question. No, not this one.
Okay. So we are not done yet.
Okay.
We are not done yet. What else do you think we must cover?
I did the calculation for the
Fringe benefit.
yes.
Uh-huh. Mm. Uh-huh. A fringe benefit. What is the section on fringe benefit?
It's not
What is the section of deemed supplies?
deemed supplies.
Mm-hmm.
Sorry. Hmm. Oh,
Yeah.
it's section 8 of the income tax.
Yes, section 8. Uh-huh. Uh-huh. So make sure I don't forget to write and then memorize, like, okay, this section is that. But as long as you know, like, deemed supply, which section, you can quickly scroll where you have forgotten.
Yes.
But they said your book should not be marked.
No, so I do have the flags on my legislation.
Okay. It must have some flags in it.
Yes, so it will be easy for me to find the section.
Okay, yeah, no, thanks so much. So a fringe benefit. Uh, in respect of the single cab backing. To the employee, to the operational manager. We have the what? Output tax implications.
Yes.
We have the output tax implications. Okay. So when you're dealing with the output tax party implications, what do we do when we deal with the output tax implications? What else? What should we look at? The output tax will be claimed, would be levied to the extent the single cab backing will be used on taxable supplies. Mhm. Will be used on taxable supplies. What we have, since the my operation, since the operation, since the what, the operational
Manager.
manager is responsible for fuel and maintenance, isn't it?
Yes.
For fuel Repairs.
Maintenance and repairs are considered as one and the same thing.
Yeah.
Okay.
The cash equivalent.
So since
Is
it's
reduced by how much? By 85 rand. We were saying?
okay, since they asked us to write the tax implications, are we correct if we take the fuel and make it a zero rated?
Who was responsible for fuel?
The employee.
So there's no implications on the employer side.
Okay.
There's no employer because it's not the one who is paying. But if the employer was paying, you can say, okay, fuel purchased for the bakkie is what? Is zero rated. There you are. You know, you are not blind. So, but be careful with the questions. If they say, explain the VAT implications, you also look at the marks in the question. You also look at the marks. If they say 10 marks, it means you need to do more than calculation. You have to look at the value of supply, date of supply. So before, as you prepare, go into those and look at, okay, what is the date of supply? What is the value of supply when something like this? When you go to residential accommodation, what is the value of supply? What is the date of supply? So make notes on those.
Okay.
Go to residential accommodation as well because a property. The properties. I remember there are some two questions. Is it one question which we did, which was based on properties? I think it's
Yeah.
two.
18D.
Have the 18D. Make
Which
sure
change in use.
if the change in use. Make sure you know what is the value of supply. What is the date of supply?
Yes.
The registration of property. What is the time of supply? The earlier of payment or registration, isn't it?
Yes.
Yes. So those are the things which you must also time when they say explain with VAT implications. You look at the value of supply, you look at time of supply, you have to look at input tax implications, output tax implications. Is it exempted? Is it zero rated? That is all. Then you collect your marks. Output tax, we simply calculate so that at least even I think it's enough for marks, for 10 marks what we've written. Even we might omit one or two things, at least you are guaranteed more than 7 marks. But the calculation is very important because in some areas we will be required to calculate.
Yeah.
What is the amount? 400,000. Multiplied by, remember, the cash equivalent would be cost excluding VAT. I mean, the determined value, cost excluding VAT. So if the amount includes VAT, you should multiply by 100 over 115.
1.5.
What is the cash equivalent if it is a single kabibaki?
It's 347,826.
I mean, the cash equivalent of the benefit.
The cash equivalent.
It's 0.6% per month.
Oh, okay. Yes, okay.
400,000 multiplied by 100 over 115 is the determined value.
Oh, okay.
Then the cash equivalent per benefit, it's either 0.6% or 0.3%.
Okay.
On a motor car, it's 0.3%.
Yes.
From this amount, that's where you would subtract 85 rand.
Because the costs were covered by the employee.
Then you multiply by 100,
15.15.
multiply by 15 over 115.
Multiply by 2.
Multiply by 2 months. When was it given? On July.
1st of July.
Multiply by 2, so it means July and August.
Yes.
Multiply by 2 and then multiply by 40%.
Yes.
How much is the amount?
208,899.
208
899.
208.
Yes, 899.
Meaning it's 209 rand.
No, so it's 208, then 899.
Oh, it's no, I don't think so. 400,000 multiplied by 100 over 115.
Okay, or maybe my calculations are
And then you
incorrect.
multiply by 0.6%.
Oh, no, so it's 209. Yeah.
Multiply by 0.6%, not 6%. Don't confuse. Multiply by 0.6%. There you have got your equivalent. From that amount, you must subtract 85 rand. Then you have got 2002. Thereafter, you multiply by 15 over 115. Then you have got 261. 261 multiply by 2. And then multiply by 40%. 209 rand. That is it. So be careful. What will be the time of supply of the fringe benefit?
The August period.
During the what? From the August VAT period. Okay, more than 10 marks. You see, we've managed to explain. How many paragraphs did you apply?
Paragraphs.
You were simply you only calculated.
I did write. I did mention. Okay, I did the calculations and explained after that.
Okay, so yeah, if you did some explanations, it's fine. But I'm happy just to see what you must touch. Even you must sometimes you might. The most important thing is doing. Remember, I said 40% in this paper is enough.
Okay.
40% is very good. Even if you can get 40, 40, 40, 40, 40, 40 in all air papers, it's fine. But the way you are at 60%. Remember, there are some students who are very, very bad.
Yes.
So you're at 60%. If you can, after this class, just go do questions which are light here from the third year. And then you would be fine. Even some questions on the study guide which are straightforward, which you've got output, input, output, input, the questions with answers.
Yes.
You will be well covered. Then let's go to the following party. It's on part B. What is B saying? Calculate the total amount of input tax, if any, that construct may claim in respect of transaction from 1 to 4. Support your calculations with the reasons. With the reasons and what? Or a valid reference to the Act. Which are the transactions 1 to 4? Here.
Yes. Those ones are easy marks.
You
The
see.
problem is the theory parts where they want to trick you.
But everything
was a bit tricky, but the second one
is
much
easy.
better.
But you see, when I said you go and do it and then we do it better, it gives you an advantage.
Yeah.
And after this class, we are not going to stop.
Yes.
Only I will send you a question which I'm doing for TAX4701 students, so that you can cover those specific deductions one-on-one. And remember, when we practice it on Friday, and then later on we go on to exam type questions, putting sections. The question which I saw covered a lot of things which we needed to be reminded of, those things which we mustn't spend most of our time when we are like we want to focus on difficult things. This one is easy marks. 1, membership fees. Fees to what? Paid to SAICA. So input tax should be claimed.
Yes.
Which section?
Yo. I didn't write the section.
Eh?
I didn't write the sections.
They say reference to sections.
Okay. Let me.
Input, I think it's section 17.2, huh?
No, not 7.
70.
Oh, okay.
Don't forget. Write it down before you go to the test. Right? Exempted. Which section? So
I did the flex. I didn't explain the X, but I can on the exam dates. I will state the sections. Exempts are on section 12. Then 0 rated 11. I have the flags here.
Adjustments, know where they are.
Yes.
SAICA is a professional organization. Remember, we said input tax is denied on a sports organization, recreational in nature. So it's how much? It's 7,000 rand. Multiply by what?
Multiply by 40.
15.
Yes, 15 over 115 times 40%.
Times 40%.
They are on section 17 2B.
Yes.
The fees or subscriptions.
Times 40%. How much is the input tax according to your calculation, Ayanda?
It's 365. 365.
Okay, 365 rand. Interest of how much?
Interest is not
10,000.
okay.
Paid to F Bank. Interest is exempt, eh?
Yes. Should I write interest is exempt or if? Oh, okay. I said interest is a financial services, therefore financial services are exempted.
That's good.
Okay.
Exempted is exempt. No input tax will be claimed. Property rates and taxes.
Property rates and taxes are zero rated. They are on section 11W.
It's zero rated. Eh?
Yes.
Section, but you know, which section?
11W.
W, like it's 11W.
11.2W. Like
2,
11 subsection 2 subsection W.
paragraph W.
Or paragraph W.
On interest.
For interest, it's section exempts.
Section 2A and 12. Is it 12.1? F.
Which one, sir?
Interest. Exempt supply.
Let me find them. Oh, it's section 12, 1A.
1A.
Yes.
1 subsection 1 paragraph A.
A.
Salaries and wages.
Salaries and wages are not an enterprise.
Mm-hmm.
They do not form part of the enterprise definition.
Excluded from
Also,
the definition of an enterprise. So when once we talk about the definition, you go to section 1. Section 1, you will see the definitions.
Yes.
Of enterprise. So let me quickly look at the definitions and see if it is there. We don't want it to assume, and then you go there, you don't find the explanation which you need. In definitions. Section 1 is definitions. Let's go to enterprise.
Enterprise is on my side.
Yes.
Page. Page 396.
I'm looking at it here now, enterprise. So these ones, there are a lot of them here. So it will be part of all these paragraphs. You might find them in one of these paragraphs. Anyway, we don't want to wait ourselves long here.
After domestic goods.
Okay.
Okay.
Let's go to C. What does C say? Discuss supported with calculations the VAT and the donations tax implications for construct in respect of donations made by the company on 1 July.
Sir.
Hello?
Because, okay, earlier I mentioned that the amounts, okay, on the question paper, they didn't tell us that the amounts include VAT. So I would assume that they all include VAT because the company is VAT registered for
Yeah.
the cycle questions. The above question that we just did now, they didn't mention that the amount include VAT.
Okay, because somebody say, yeah, the vendor is a registered vendor, but normally they will tell you. I don't know why they didn't tell us.
Maybe they wanted to trick us.
So let's look at C. Discuss with the calculations the VAT and the donations tax implications for construct. Let's start with the VAT implications. Okay, let's VAT and the donations tax implications. That is the heading. Let's start with the VAT implications. Where are the donations?
Donations.
Construct is committed to corporate social responsibility, and therefore the company sets out a budget of CSR every year as a result of the impact of COVID-19. The budget of the current year was reduced, and construct only made the following donations on 1 July 2022. 20,000 cash to a crash, and 12,000 cash. Those are the donations. Are we going to have VAT here? VAT, remember, this is money. But when we talk about VAT, we said VAT is accountable when there's a supply of goods and services.
Yes. So cash is what recognized as a good.
Yeah, cash is not regarded as goods. Normally, it's exempted.
Yes.
What was donated?
Do we have to write those things, sir?
Yeah, you
Okay.
don't omit. To the crash. What was donated to the crash? What did you write there? And the what? And the local organization is cash, is money.
And the person who's donating, is it a person or a company?
Let's look. It's the company construct.
Yeah. So
No one.
that
So no one is no one insisted. No one
am I
insisted.
right? Am I right if I did specify that the person okay, I did identify who donated and
No,
I mentioned
you are right.
okay.
You are right. Remember, if we say write what I write and what you would write will not be the same.
Yes.
As long as you are putting forward the points, the purpose is communicating. Communicating is very important. So even if you look at the marks allocation, they take into account communication. So when you write, the person who is marking must be able to understand, or maybe you are writing to a financial manager or to a client, they would be able to understand. Money is not is excluded from definition of goods. Therefore, it's exempted as well. Construct will not account for VAT. True. Donations tax implications. Let's look at the first one. $20,000 donated to nearby community. Which is a charity, a public benefit organization. A public benefit organization. So yeah, no donations tax is payable, isn't it?
Yes.
We're gonna say donation to PBOs.
So, sir, I wanted to ask you something about the donations. Okay, the donations for okay, the donations to PPO. Okay, if a company donated something to a PPO, then on the income tax framework, do we include that amount?
They will be entitled to a deduction.
Oh, yes, I wanted to ask that, but on the donations tax, we do not,
It's
like,
exempted
it
for
is
you don't pay
exempted.
donations. You don't pay donations tax. It's simply exempt.
Okay.
So that is what you are going to have with this module. You don't only look on one side.
Yes,
You have to. It's exempt here, but the good thing you also get a
it's
deduction
deducted.
under section 18A.
But for, yes, but for the one that is 18A certified, not
Yes,
just
if the taxpayer was able to get section 18A,
certificates.
yes, from on making the donation,
Okay.
then they will be entitled to it. But that is when they say, okay, calculate income tax for trans construct.
Yes.
So with this module, as you go on, they can ask you VAT from VAT, and then they say calculate your VAT, and then calculate input tax, calculate taxable income. On the same question.
Hmm. So I wanted to ask this because there was this other question that included okay, they asked us to explain the tax implications, meaning the VAT is included and the income tax.
Yes, you must. Sometimes there's donations tax. There are sometimes
Yes,
there's transfer duty.
yes. Your I tax is broad.
So tax is very broad. Tax is very broad. So if they say tax, just you have to concentrate and be careful. But at
Mm,
least now it's good because we haven't discussed many chapters. They still bring in some chapters, but they're only bringing in some simple things. But once
okay.
we are more than halfway, once we have covered the natural persons tax after the third tax test, you will see now they'll bring such questions. So you need to be
Okay.
okay. What happened? Highlight. Okay, donations tax. VAT. If you read the question, if they say tax implications, then it means all the tax, which you can spot there. So yeah, not bad enough. So donation to public benefit organizations are exempt. They are exempt for donations tax purposes. Which section?
Um,
56 what?
section 56 1H.
Subsection 1 and then H. Yeah, very good. Mhm. Then there is, let me put a mark, like A. B. Donation to what?
To a local organization.
To a local organization. Which local organization?
University. Local organization hosting a fund run to help raise funds for university fees for disadvantaged students in the community.
Does it fall part of those exempted organizations?
No.
The most important thing here is who is the donee.
The donor or the donee?
The donee. Who is the donee? Is the
Donate.
local?
Yeah.
Is it a traditional municipality? Is it a government sphere? No. It's just a local organization which is not registered. It's a public benefit organization. So they have to account for what?
VAT.
For VAT. No, not for VAT. For donations tax.
Yes, for donations tax. So, okay. Yes, they have to account for donations tax. And we need to account for, I stated that the donor is a company, therefore we'll apply the 10% general exemption.
10%, no, 10%.
Oh, 10,000. I wanted to say 10,000.
The exemption doesn't apply.
Doesn't apply?
Yes. So the exemption only apply to casual donations which are less than 10,000. So if the donation is just above 10, you're not going to subtract anything. The full amount would be taxable.
Okay. The full amount will be taxable.
Yes.
If we pay an amount more than 10,000.
If the amount is more than 10,000 rand.
Then if the amount is less than 10,000?
Then it's fully exempt.
Oh, okay. Now I see.
So once it exceeds 10,000 rand, no exemption there.
Okay.
You only subtract that 100,000 if the taxpayer is a natural person.
Oh, okay.
But for companies, they'll say, okay, casual donations which are below 10,000 are not taxable. Are exempted, but once they exceed, you don't deduct the 10,000. The full amount would be taxable. Do you understand this clearly now?
Yes. Yes.
Doesn't fall into the categories. Exempt organizations. Exceed 10,000 rand. So it's fully taxable. Donation tax payable. 10,000 multiplied by, no, it's how much? 12,000, sorry. Multiplied by 20%. How much are we getting?
It's 2.4 thousand.
2,004.
So yeah, I think I got it wrong when it comes to the 10,000 because I took 12,000 and minused it by 10,000 and I multiplied by 20%.
Oh, okay. No problem. That's the way it is. What happened? Yeah. It's how much? It's 2,000?
400.
2,400. Okay. Yes. So be careful. That's why it is good for us to discuss.
Yes.
Then we go to part B. Let's look at questions relating to part B. It's 12 marks plus 5 plus 5, 20 again. Discuss supported by calculations any South African tax liability for Karabo in respect of the sale of the holiday flat to Mr. Locke. In your answer, also discuss any responsibilities that Mr. Locke as purchaser has in terms of the transaction. Marks will be awarded for reference to legislation. Assume that Karabo remains a non-resident for tax purposes. Ignore the double tax agreements between South Africa and the UK for purposes of your answer. Communications, clarity of explanation is very important. You see, now they completely ran away. Remember, you have spent most of your time, you have forgotten your third year things.
Mm-hmm.
You have been studying VAT and donations tax. And here's a question, 20 marks. What you do is to freeze.
But I did go through the gross income definition, the residents and the non-residents, the exemptions. I did.
Okay.
So in this, okay, before answering the question, let's go through the scenario.
It's a good one. Karabo is 32 years old and is not a resident of South Africa. She was born in South Africa, but she has been living in the United Kingdom since the age of 10. Karabo got married out of command of property to Sifiso Rabada, a 33-year-old resident. On 15 August 2021, Sifiso is a successful businessman with various business interests in South Africa and the UK. Sifiso met Karabo on one of his business trips to the UK. He returned to the UK 2 weeks prior to their wedding date. The couple decided to stay on in the UK for a few weeks after their wedding, and Karabo then resigned from her work. On 5 November 2021, the couple returned to South Africa, where they had decided to settle permanently. Before coming to South Africa, the only South African asset owned by Karabo was a holiday flat in Cape Town, South Africa. Karabo bought the flat in 2017 while she was on holiday in South Africa for 1,680,000 rand. She and Sifiso agreed that she would sell that flat because Sifiso already owned a holiday home in South Africa that was more suitable for them. Karabo sold the flat on 30 September 2021 for 2.3 million to Mr. Karabo, to Mr. Locke, a resident. Karabo paid estate agent commission of 65,000 on the sale transaction. This was the sole disposal made by Karabo during year 2022. During the 2022 year of assessment, Mr. Locke paid the purchase price on 31 October 2021, which was the date that the property was transferred and registered in his name. It was before she became a resident, isn't it?
Yes.
While she was still in the UK. While she was still in the UK, she decided to do what? To sell. So what are the tax implications which would arise?
The CGT, capital gains tax.
But the first thing is what? They said.
So, Karabo is not a resident. Therefore, okay. Okay, I wrote that Karabo is not a resident and she will be taxed on income from a South African source.
Yes, it's fine. One.
I further explained that she owned a holiday house in South Africa that costed 1.680 million.
As a non-resident, she will be taxed on amounts would be taxed on amounts and in the Republic. The disposal of the flat.
So, we just jump straight to the disposal. We don't have to explain the
What?
income. The income.
What do you think we must explain? It's fine. You can tell me.
I'm not sure. Please correct me.
Yeah, no, you are right. Remember, somebody,
Stated
whatever comes into your head, let's communicate it.
before disposing, I did explain that the Karabo bought a house costing 1.8 million.
Yeah, but that one is not though necessary.
Oh, okay.
It is not though necessary. You put it when you are now calculating CGT.
And it will be recognized as an income.
As a basic cost.
Oh, okay. Okay.
Basic cost. So the disposal of the flat will result
The proceeds
into capital gains tax implications in South Africa.
Oh, okay.
Now,
Okay.
in South Africa. and an inclusion. Was he female, Karabo, or male?
A female.
Near taxable income. So let's look at the CGT part. CGT calculation. Proceeds. How much was it sold for?
2,300,000.
4,300,000.
2.3 million.
2.3 million.
Yes.
Okay. Base cost.
Base cost it's 680 million. And I'm not sure if we did read the other statement.
Purchase price. It was purchased for how much?
It was purchased for 1.680 million.
1.68 million.
So they did mention that Karabo paid an estate agent commission of 65,000. Are we not supposed to add?
It's part of base cost. Agent commission. How much is the agent commission?
65,000.
What are the expenditures?
55,000. 550. Oh, there are no any expenses.
No any other expenses.
Yes.
Okay.
If they had any expenses incurred during that financial year, we're supposed to add them under the base cost.
Provided they fall under paragraph 20.
Oh, okay.
Remember those expenditure which we said they fall under paragraph 20. Paragraph 20 would touch some expenditure like improvements, tax paid by the donor,
cost of moving, advertising costs.
Advertising cost, yes. But there are some expenditure like interest on a loan that are excluded. Repairs are excluded.
Okay.
So you simply have to be careful of that. What is the total base cost?
Total base cost it's 1,745,000.
You see, it's how much?
1,745,000.
Yeah, but it's fine. We simply write base cost here. That is the base cost. So how much is the capital gain now? This is the capital gain.
555,000.
555,000.
Yes.
This is the capital gain. Was not married in community of property, isn't it?
Yes. But if they were married in community of property, we were supposed to multiply by 50 the capital
So we
gain.
will share this
Capital
amount.
gain.
And it's not a primary residence. So therefore, there's no primary residence exclusion.
Yes.
There's no primary residence exclusion to worry about.
But there's an annual exclusion.
Yes, for natural persons.
Yes.
So the annual exclusion is how much? 40,000 rand.
1,000.
This one also will be net capital gain.
Yes. The aggregate, I said.
You said
Total
aggregate?
yes.
Yeah, total it is after you have added all the gains together.
Yes. And then less the exclusions. And then I get aggregate.
Yeah, less, and then you have got to aggregate after you have added it together.
Yes.
But it's only one asset.
Okay.
It's only one asset. There's no really need. Even if sometimes we are just naming, we're not even supposed to name.
Oh, okay.
But usually net capital gain is after subtracting assessed capital loss. So aggregate gain, you right? Let's not name and then okay, taxable capital gain. Taxable capital gain will be 515,000 multiplied by 40%, isn't it? That is the rate for natural persons.
Yes.
How much is 40% of it?
206,000.
200 and what?
6,000
rand. That is this one would be included in a taxable income.
Yes.
Does she have any other income from South Africa?
No.
So this one would be, what did we say? They said we should calculate tax liability.
Yes.
Okay. Okay. Let's say normal tax. The tables.
Do we include the normal tax tables?
Yeah. Remember the tax liability. How much is the normal tax?
When was the last time I checked the schedule?
But I'm sure I do. If I like to open this table whenever I'm holding a class, we simply use for this year. Doesn't matter.
No, I also need to flag the tables, the schedules.
But your book is there. You do have it in your book.
Yes.
Yes. Remember, you're carrying it to your examination.
Yes.
So this one would provide. That one will provide. That's why they don't put tables.
Mm.
Because they also want you to support the company. Okay. This amount is below 237. So tax will simply be 18% of the amount. How much is 18% of the amount?
18% of the. Let me calculate. Say, I found the tables. They are on page 289.
Okay. So that is the good thing of always using the book. Now
Yes.
you know where a lot of things are.
It's 5,598.
Not 37,000.
I used the 18%.
Yes. 206 multiplied by 18%.
Oh.
Mm-hmm.
I said the 237,100 less the 206 times
No.
18.
It's just like from 0 to 237. It's
Oh.
18% of each rand. You start subtracting when it is over, like here.
Oh, okay.
Okay. Okay. Then let's repeat.
The age.
Rebate, but this one was old, but we simply use this one. It doesn't matter. What matters most is the formula used if you are following the order. 17,235 rand. 17,000 to what is a rebate? Age rebate.
If Okay, we'll use the amounts using the age of the.
It's a discount. This is the discount. A rebate is just like a discount given to taxpayer based on their age.
Okay.
Uh, it's a fixed discount given, which is dependent on the age. Remember, a discount is the amount you got is subtracted. Okay. She did not have any medical scheme, so we are not entitled to any tax credit. So let's get the normal tax payable.
So in the next test, we'll go through the rebates, the income tax.
If they ask you like normal tax liability,
Oh,
you
okay.
have to go there. If they say taxable income, you simply stop here.
Okay. But they didn't, okay. On the scope, they didn't say much about the tax liabilities. They
But
just told us.
they always say so, but they end up bringing.
You're okay.
But remember, they're not going deep. They're talking about residence status. Residence status is above. Remember, if somebody is a non-resident is coming here, you must remember things from your third year. And it's affecting CGT. That's what we today told us. They tell us on your copy, yes, we told you that there is CGT. But this is CGT, but these are some of the things you need to know where your CGT affects you. So from this amount, it's 19,000. Remember, the person has paid withholding tax. Remember,
Of how much?
15% of the selling price. Not is it, or you said is it 15 or 7.5%?
It's 7.5 for a natural person.
Yes. Mr. Locke must withhold that amount. So that
Okay.
when you are determining your tax liability, you should now subtract withholding tax.
So, okay.
From here. The withholding tax was how much is it? 2.3 million multiplied by 7.5%. How much?
It's 172,500.
500 rand.
Okay, after calculating the rebates, then we need to consider the withholding tax because the person who bought the asset was from the other country.
Was from South Africa, was a resident. Remember, if you are a resident, you acquire an asset from a
No,
non-resident, you must
she was
withhold.
not a resident.
But the person who purchased is a resident.
Which one? Sfiso or
Mr. Coco, yes,
Karabo? Oh, Mr. Log.
Mr. Locke was a resident. So
The
when you
one
are,
who's
I am Madonda, I'm a non-resident. Let's say I've got properties here in Santon.
yes.
Then I'm not a resident. I just come here a few days. I go back to Zimbabwe. I come back. Then I sell my property in Santon to you. When you sell me the asset, when you buy the asset from the property from me, you must withhold 7.5% and pay it to SARS on purchase.
Okay.
So when I'm doing my own returns, I'll take that into account because I've already paid.
Oh, so okay. In this case, Karabo sold the flats to Mr. Log for 2.3
Yes,
million. Then
yes.
Mr. Log needs to account for the withholding tax because he bought the asset from
She
a
must,
non-resident.
he must withhold. When I say withhold, it's like he must calculate 7.5% of 2.3 million
Who?
and
Karabo.
eh, and
Who
subtract
must
it
calculate?
from the amount which was paid to Karabo. So Karabo did not get the full 2.3 million.
Okay.
She got 2.3 minus 172.
So the 7.5% goes to who?
To
To
SARS.
Mr.
It was
Log.
paid. It was paid to SARS already.
Okay.
Remember, with the withholding tax, you are going to withhold it after buying a property from me. When you are supposed to pay me maybe the 2 million, you withhold 7.5% and pay it to SARS quickly. It's a
Okay.
withhold.
In this case, who's withholding the tax? Karabo or Mr. Log?
Mr. Lock or withhold.
The
Let's say from
7.
the stage he had already withheld it on time of purchase and paid directly to
Hence,
SARS quickly.
hence, Karabo is minusing the 175.
Yes, because
Oh,
she has already paid it to SARS, but she did not go
mm,
directly. The
to some.
resident who bought it paid it already to SARS.
Now I get it.
Okay. So now she must get a refund a little bit because she has already paid some tax in advance. Tax refund. That's how it does. That's how it goes. So SARS will actually allow the withholding because a non-resident is a non-resident.
Okay.
Things might happen, like somebody does not have any knowledge about the tax and will actually run away, get the money and go. It happens. So by withholding, the government will not end up losing.
Oh, okay.
They've already withheld more than the tax the person should have paid.
Okay.
You are going to have your clients who are non-residents. You have to advise them, okay, there's nothing. Do your returns so that you can recover part of the withholding tax, which was already paid. Okay, so if you sell your fixed property in South Africa, I can file my returns as well. Go to SARS and file. Yes, the source is in South Africa. Calculate, but you need also to look at CGT versus the. Do you have other incomes and so forth? Some will simply ignore. But if you are, you can. I mean, if you are not actually going to ignore because you end up losing a lot of money for nothing. But the government is doing so because sometimes a non-resident doesn't know much about the taxes in South Africa. And somebody can sell and then leave the country and go for good. The government will not be able to trace them. But actually, they were supposed to sell to pay tax on the property which is in South Africa. But they've left. So when that year when the government do the auditing, then they would realize like, oh, what happened? This person did not pay tax. So with the withholding tax now, you as somebody who bought a property from a non-resident, you become liable if you don't withhold. The government would say you were supposed to withhold this tax. You are liable. The government would recover the tax from you because the act says you must withhold some tax and pay it directly to SARS. Which section is that?
No, I don't know. I'm not sure, sir.
Is it 25? 25? Is it 25H?
Okay.
Is it 25H or 25 something, 25A or 29? Okay, it's very important. Let's go to the non-resident. I wanted to go. I'm looking for the student's approach. Okay, let's look at non-residents. Not here. There's this topic which I know. Taxation of non-residents is here, yes. Is 35A, disposal of movable property. So here we have got to see, you will see a number of, say if the seller is a natural person, 7.5%. If the seller is a company,
It's 10%.
A trust, 15%.
Mm.
So withholding tax is under which section?
Section 35A of the income tax.
35A, yeah. Section 35A, withholding tax. So that is it with natural, with the, it's non-residents. They said we must look at implications.
So withholding tax is involved when there's a non-resident and the non-resident is selling the movable goods.
Sold
Immovable.
sold an immovable property. Then
Oh,
the buyer must withhold 7.5% and pay it to SARS. So they're doing it in case a non-resident who is not from Africa can actually live without filing their returns.
Okay, I said you're saying okay. Withholding tax is involved when a seller, a non-resident, is selling the property to a resident. So the resident needs to withhold the tax.
Yes.
Okay.
So it's the withholding tax is not stopping on immovable property, even on royalties.
Okay.
If I have got some intellectual property, let me say I've got a patent which you are using, but the patent are here in South Africa. When you are paying those royalties, you have to withhold. I'm sure it's 15%. From royalties, there's also withholding tax on interest.
But it involves someone who is not a South African resident.
Yes, you are paying to a non-resident. If you are paying interest to a non-resident, you have to withhold the tax.
Okay.
So they are doing so because a non-resident, the government doesn't have control over a non-resident.
So how sure are we that the person who, okay, the buyer is a South African resident?
If a buyer is a South African resident, yeah, but if it happens that the buyer is a non-resident, remember the property is based to South Africa permanent establishment.
Because on vets, the person needs to be a vet vendor. They need to be registered for vets. So for income tax, do we need to double check that the person we are selling the property to is a resident or a non-resident?
So I mean, you must, even if you are a non-resident, you are paying somebody who is a non-resident. You are based in South Africa. You bought somebody from a non-resident. You have to withhold anything paid to a non-resident. So sometimes if you don't withhold, you suffer in the future.
Oh, okay.
When the government are following you, okay, you paid some royalties to this non-resident. Did you withhold? The act says you must withhold. So because you did not withhold, you are liable. You were supposed to withhold. So there's withholding tax on interest according to section 58 to 50H. Even on sports services, on service rendered to on services as well. For example, normally we do have the rugby tournament in South Africa, or sometimes South Africa would invite Nigeria to come in them and play in the Mandela Challenge. They used to do so. So if they are paying those sportsmen, they must withhold and pay it to SARS. So this is done to reduce some workload and giving obligations to non-residents who are possibly here in South Africa for a few days, and then they don't know much about returns. So the government would require somebody who is in South Africa who is paying that non-resident to withhold an amount and pay it to SARS. Well, if that non-resident is aware of how to do the returns in South Africa, they can do their returns like normal, like what we've done. And then later on, they can subtract the withholding taxes, which was held. So if somebody is like this non-resident, she even got a refund. But most non-residents, we don't even care. It's a lot of work. I can't really spend like the whole year. I can't really afford to come back and try and deal with documentation in South Africa. I will just say, okay, that 15% which I was deducted, it's fine. I'll let it go. How can I travel from Harare and come back here for such a little amount?
Okay.
So that is the importance of withholding tax, because non-residents are taxed on amounts earned in South Africa. But you have got a lot of non-residents who doesn't know South African legislation. They don't know where to go when filing returns. They are completely lost. So to reduce the workload, that is what is required. If it is an immovable property, the buyer must withhold an amount. They must withhold 7.5% on the amount which they must pay to that non-resident and pay it to SARS. If that non-resident doesn't bother doing returns, it's fine. He has lost out. But if he's successful in doing his returns, then he can recover his money back. Are you in a better position now?
Yes, I now understand everything. Clear.
Okay, that is here. Ignore double tax legislation. Assume Karabo, even they said, okay, also discuss any responsibility that Mr. Locke as a purchaser has in terms of the transaction. So the responsibility is for him to withhold 7.5% to withhold the tax and pay it to SARS. Let's look at query 2. Tim Watson is a South African resident. He is a qualified mechanical engineer and he has been working for the same South African company for over 25 years. Tim reached the retirement age and retired from his South African employment on 28 February 2021. He had, however, also previously worked for a foreign company in Texas in the United States of America for 10 years, of which the last year of his service rendered to his US employer in terms of his foreign employment were physically rendered in South Africa. As from 1 March 2021, Tim received a monthly pension of 12,000 from the foreign pension. Tim received interest of 150 in fixed deposit with a bank in Texas for his 2022 year of assessment. Tim's brother is an administration position at the South African employer that Tim worked for 25 years. Tom is 48 years old and has been with the South African company for just over 3 years. Tom's daughter Carrie is 19 years old and has been awarded a bursary of 60,000 to study an NQF qualification at a university in South Africa. Tom's total remuneration earned in this 2021 year of assessment was 520,000 rand. And his remuneration for the 2022 year of assessment amounted to 545,000. Tom's remuneration was not affected or reduced for his daughter to obtain a bursary. First of all, they want Tim. Tim is a non-resident.
Yes.
Which amount must be included in his income? What is income? If you are told about income, we know that income is equal to gross income less exempted income.
Right.
Aha. So now let's look into amount. Was he a resident? Was Tim's income? Tim was he a resident of South Africa?
Yes.
But was working outside South Africa.
Yes.
First of all, let's look at the monthly pension.
So pension will be recognized as an income, right?
You are saying what?
Recognized as an income under
Yes,
gross income.
remember it is an annuity when it comes to monthly.
Yes.
Paragraph C of general deduction formula. You see any amount, I think it's paragraph A, any amount received in the form of an annuity is gross income in the taxpayer. Is gross income in the hands of the taxpayer.
Oh, okay.
So how many monthly? Remember, it's monthly. An annuity is an amount which is received monthly or annually.
Tim received a monthly pension of 12,000. So we'll say 12,000 times 12. From 1 March to 28 Feb 2022.
So how much is that?
144,000.
Remember, pension, which is somebody earned from outside South Africa. How many years did he work partly in South Africa and partly here?
Here they mentioned that he worked for 10 years.
Exempted
Also as well for foreign company for 10 years, of which the last year of his service rendered to U.S. employer in terms of foreign employment were physically rendered in South Africa. So out of 10 years, the last year of his service rendered in U.S. were physically rendered in South Africa.
He has been working for the South African company for over 25 years.
Oh, okay.
Tim reached retirement age from his South African employment on 20th February 2021. He had, however, also previously worked for a foreign company in Texas in the United America for 10 years, of which the last year of his services rendered to his U.S. employer in terms of his foreign employment were physically rendered in South Africa. So out of 10, there's one. He was physically here in South Africa.
For a full 1 year.
Was the company based in South Africa?
No.
Or was it doing online? Or was the pension?
Maybe they had a branch in South Africa.
Okay. So, but it's fine. The foreign pension is 9/10, isn't it?
Yes.
multiply by 144,000. How much is the exempted part?
Oh, sir, I want to ask, why do we include the years under the exemption? Why not also
Remember,
income?
foreign pension amount, the pension which is earned outside South Africa, it's exempt.
Yes.
But the one which is the income which is attributed to the service rendered whilst someone is in South Africa is taxable.
Oh, okay. Now I get it. But sir, they mentioned that if anything that is exempted, it should be on gross income.
Yeah, remember this is CTA level because it's already in gross income. Any annuity, remember, any annuity is, or you are receiving an annuity as a resident. That amount must be included in gross income. So in short, this is our gross income.
Oh, okay.
144, and now we are subtracting the exempted part.
Oh, okay. It is 128,600.
This is the exempted part. What else was received?
Interest on the fixed deposits with the bank on tax. But the interest, isn't it a foreign interest?
It's foreign interest, yes.
And foreign interest is not, we do not exempt.
Yeah, foreign interest is fully taxable. Which is how much? It's 150,000. So on the same, let's look at foreign interest so that we understand it. Foreign interest we know, but let's look at foreign services. I think it's on exempted income. So that we're able to put in the sections. We might be straying off topic though. Remember, this is for 2022. But
Yes.
you saw with other, they just bring whatever they want on natural persons.
Section 10, 1I.
The pensions. You found it
Yes, section 10, 1I.
relating to employment. In terms of section 10, GC. This is employment or policy. Employment outside South Africa. The 1.2 million to 1,250,000 would be exempt. Ah. I wanted to look at the foreign pensions. You said let's go to the cycle.
For the foreign pension exemptions,
Uh,
it's section 10, 1GC. 1 small capital letter G and big C. GC.
Section
10 GC.
You see how hectic this module is sometimes.
Yeah, sometimes I ask myself, why did I choose tax?
All of the modules are like this. All
Oh,
of things.
I regret every time. The passion is no longer there. Say,
But at least you are working very hard. You pass, and then it will be worth it.
yeah.
So just imagine if you are not working hard like what you are doing. Postgrad, whatever module you choose for postgrad, it's a hell. If you are not strong enough, you deregister.
Yeah, it's a lot, and I have FAC on the other side. I
How is FAC?
a bit tricky. Yeah. I feel like I need someone like you, say, like a tutor, a one-on-one tutor, because I don't understand much of the things.
Let's look. You say safety section 10.
10 GC.
Capital letter G.
No, small letter G and capital letter C.
Where is it? Oh, it's 10C.
1 GC. Where is section 10? Go to section 10.
Yeah, here we go.
Oh, yes.
GC. Any amount received by or accrued to any resident under the social security system of another country, or lump sum pension annuity received by or accrued to any resident from a source outside South Africa is considered for past employment outside the Republic other than from any pension fund. It's exempt. So, but remember, physically, somebody was physically absent in South Africa for 10 years. That one is it's exempt. But he was physically in South Africa, drinking South African water, using South African resources. So that part you earned when you are working here is not exempt. So we have to subtract the exempted income. It's section 10 GC.
Yes.
Yeah. That is it. Okay, they want income. We said there's no exemption on interest. I'm now very tired. The whole weekend I did not even rest.
At least we are not writing an exam. How about us? I am tired, and tomorrow I need to write, and the day after tomorrow.
I'm also feeling the pressure.
Yeah, hey,
Also feeling the pressure, like I must do. That's why I'm encouraging you. Like after doing something like this, just refresh with easier things from the third year, and sleep early. So this is income.
I don't think I'll be able to sleep, but I will try. But I don't think so.
Okay, this is your income. It's fine. You get your answer. Then let's quickly do the final part. Calculate the basal amount, if any, that Tom must include in his income. So remember, the bursary, it depends on who is the recipient of the bursary.
Yes.
Let's quickly go to the exempted income. I will just highlight for you from the silk. So that we
Income
rest quickly.
section
On the
30.
bursary.
It's section 30. Oh no.
Did you find it? Okay, I forgot that I asked you to answer it. Already you have it.
Section 10(1)(q).
So exempted on a natural persons is under section 10, isn't it?
Yes.
So that's how you master the sections. Let's look at exemptions. These are employee related. And there was also employment outside South Africa here.
It's section 10(1)(q). Scholarships.
These are so it depends on who got the bursary. If it is the employer, that bursary is fully taxable unless there's a written agreement that in case the employee doesn't finish the qualification because of reasons like illness or death, the employee would refund the employer. Then that bursary is taxable. But if there's a condition that if I fail to complete, if I fail to complete, I'm going to pay you unless I died or unless I became sick, I couldn't further my studies because of health reasons. Those are the two conditions which would qualify for an exemption. If there's no agreement, bursary from employer to employee is fully taxable. Then let's look at to dependents. It now depends on the NQF level, but mostly the remuneration proxy is very important. If the remuneration in proxy exceeds 600,000 rand, then there's no exemption whatsoever because somebody is already earning a fortune.
No,
If
the
the
remuneration is below 600,000.
You can afford to part away with
Also,
100.
if an employee earns more than 600,000 per annum, then they are not. The company won't be able to fund them to do their studies.
They can give them, but the bursary is taxable.
Oh, okay.
Because already you are earning a bed. The exemption will only start taking effect if your remuneration is below 600,000. And the exemption will depend whether on NQF level and also on disability. On disability. So from grade R to 12, and somebody is not disabled there, it's simply 200, it's 20,000 rand exemption. But if it is the NQF level
5 going up, 5,
1 to
6.
4, is it?
From 5.
Yeah, if it is NQF level 5 upwards,
Yes,
1,000 will be exempt. And if somebody is disabled, if the beneficiary is disabled, like the child whose fees are going to be paid is disabled, from grade R to 12 is 30,000 rand. And then from NQF level 5 upwards, it's 90,000 rand. Now let's look at the situation at hand. on the question. What is the status? Who is the recipient? It's Tom's brother here, isn't it?
Yes.
Who is Kerry's daughter? It's Kerry Tom's daughter. It's 60,000 to study NQF level. That is within the range. And Tom's remuneration end in his 2021 year of assessment was 520. So this one qualify for an exemption. So the basal would be fully exempt because the NQF level, it's what?
Less than 600,000.
The remuneration prox is less than 600,000, and the amount we said the exemption for NQF level when somebody is not disabled is 60,000.
Yes.
So this one is fully exempt. So yes, the full basal would be exempted. So when you put the reason, you can say, okay, the reason are one, the basal was granted to the relative of an employee, and the amount does not exceed the remuneration prox is below 600,000 rand. So therefore, and the exemption within that range for NQF level 5 to 10 is 60,000 rand. Therefore,
Is that even
would be exempt. What did you want to say?
I wanted to ask is it allowed for me to or for my company to pay for my brother's school fees?
Yes, but it's you who's normally taxed if there's a taxable benefit. Yeah, remember they are granting your brother a fees, but they are granting him because of you who is employed to them.
I didn't know about that. I think I'll take my sister to school.
Provided the company says yes, we can help.
Oh,
Yeah. But it's more tax to you. But provided you don't pay that amount.
okay.
Provided you don't exceed 600,000. Once you exceed 600,000, you would have like 60,000 included in your taxable income.
Mm.
But if your remuneration prox is below 600,000 and the base are being paid to your sister is less than 60,000, it's fine. Provided the company is happy with you and wants to help you.
Mm.
I just imagine telling him where I'm working, like, okay, pay my son. So, hey, yeah.
Oh,
Okay, thanks so much, Ayanda. All the best. Right now, just rest. I'm sure we have covered enough.
yeah.
Actually, you can go on and you can go there and pass. You go there and pass. Don't panic. Remember, 40% would be fine in this module.
Okay. So yeah, let's hope for the best. I need to go through the gross income, the income tax X, everything. We cover the gross in the tax liabilities and the withholding.
Just stick on that. Just
Yeah.
stick on that.
Oh,
And
okay.
that donations tax.
Oh, that's where I will collect the marks.
That's where your module is based. VAT, donations tax, and
Oh, okay.
CGT. Those are the main areas.
Okay.
Natural persons, if you know like how to use rebates, is a foreigner. Okay, let's calculate CGT. Yes,
Oh,
sometimes they trick you, but by bringing in, but they won't be like huge marks.
okay.
Okay, thanks, Ayanda. Let me rest.
Okay, thank you. So we'll meet again next week, Friday.
Yeah, on Friday, soon after you have written, I don't even want to ask how it is. I simply post a question which we must do.
Yeah, please
And
do
then
that.
we start. I saw that big question for text 3701, a very which will be able to which will be able us to cover all those specific deductions, inclusions, and gross income and so forth. So that
Okay.
when we start real tough things, then we are not going to worry about those minor things.
Yes.
Okay, thanks so much. Ayanda, all the best. And thanks so much, team, for being part of us. I know some of you, some are not did not manage to attend this class, but I wish you all the best. I know you will go through the recording. All the best. Don't panic. Don't panic. And in this module, don't cry for a distinction. Never, never. If you can get 35%, it's still good. It's still good. It's still good. What is most difficult? What is most difficult in this module are tests. The real examination is very easy. If you can go to the exam room and at least on your own when no one is not helping you, and all those tests you are able to score 35%, 35%, and 35%, or somewhere if you can score 40%, and when the time for you to write exam come, obviously you would be able to pass because you are no longer panicking like you. You would be very strong, and you would have also learned from your mistakes in the tests. Remember, the purpose for the examiners for the lectures to make the test difficult is because they are in the process of training you. When you are being trained, they make the test a little bit difficult. But if you face a very difficult test with the examination, it will be easier. I've got experiences with the students who failed all the tests and went on to pass very well their examination. So don't panic, be strong. Don't run away and say, I don't want to write. Go and write. Thanks so much, guys, and all the best.
Bye.